Hello and welcome. I am Yatin Mota and you are watching Closing Bell with me on this Moneycontrol platform. Today we also have one of the renowned technical analysts, Ashish Bahety, on the show. But let's talk on the markets first. A challenging, one or two trading sessions, but today we had a smart recovery from the day's low. In fact, if you talk about the Nifty, we had a very sharp recovery of nearly 200 250 points from the day's low. In fact, Nifty ended the day higher by nearly 140 points. If you look at the Sensex, also a smart 450 points gain is what we saw. Nifty reclaimed that 24,800 mark, and Nifty Bank also was trading in the green. If you look at the mid and small cap indices, almost a percentage higher for both of these indices. Now, if you look at the advance decline ratio, almost 3:2, wherein the markets gained momentum in the second half of the trading session, and sectorally we had all the sectors in the green. So a good day for real estate stocks, banking stocks and IT stocks, which have been recovering from the day's low. In fact, real estate, pharma and energy index, all of these were up anywhere between 1 to 1.5%. If you look at the market stats and Nifty 50 gainers, we have Jio Finance, and ahead of the fundraise board meeting tomorrow, we had the shares which moved nearly 5% in trade. L&T ahead of the numbers this week was up 2%. Big boy Reliance Industries, Asian Paints post the numbers, and Eicher Motors were the other gainers on the Nifty 50. When it comes to Axis Bank, TCS, HDFC Life, those stocks continue to remain weak. But look at the Nifty 500 or the mid cap end of the market, very active. Stocks like Apar Industries, Affle, Welspun Corp, Tata Chemicals surged in trade, 7-8% gains coming in. So overall, a very healthy day of the Indian stock markets, coupled with a good recovery ahead of this expiry. When it comes to the June series, obviously we'll also start the August series very, very shortly. But yes, how does the market setup look like? How does the Nifty setup look like? Today, as I mentioned earlier, Ashish Bahety is with us. Ashish, good afternoon. Welcome to the show. Talking about the Nifty setup, how does it look like? Because it is disappointing to see the Nifty slide below that 25,000 mark. Do you think ahead of the expiry we could see some further short covering on the markets?
Good afternoon, Yatin. Yes, I mean, after 4 weeks of relentless selling in Nifty, there was some recovery today. But however, the concerning area is the VIX. India VIX is trading at 11.5, which is a sign that we might see a volatile session. I mean, VIX coming so low. So there's a high chances that there will be a spike in VIX in the next 2 days before or till the expiry. And the way Reliance has contributed to the Nifty today was the only significant factor. I think Reliance and HDFC combinedly contributed almost 60 plus points. So we'll have to see how the Reliance shapes up today, tomorrow. If Reliance continues to hold its 1400 mark, we may see Reliance heading towards 1460 and 1480 zone. And if that happens, yes, Nifty will be creating a base in this zone. But any dent in Reliance tomorrow, we might see Nifty slipping back to 24,300 mark. So the whole lookout should be on Reliance and the IT pack. However, if I'll say bank X of HDFC today, most of the banks were on the weaker side. ICICI, Axis both ended up almost weak to flat. So was the Kotak. So we'll have to see how ICICI moves in tomorrow's session. If the ICICI contributes to Bank Nifty, we may see a Bank Nifty also heading towards 56,500 and 56,700 zone. Yes.
And Ashish, except for ICICI Bank, I think, and HDFC Bank, we have seen the results also quite weak. IndusInd Bank, Kotak Bank, all of these numbers were quite weak. From here on, if there were leadership to come in for the markets, IT is not doing well, bank results have been mixed. What sectors or stocks do you think would lead the markets from here on?
I think the market has given a clear indication that FMCG is a one counter to look out for. The valuation is very comfortable here, and we may see whatever the policy changes happened in last 6 months. The FMCG might pick up from this here from this zone. So FMCG is having a sweet spot at this point of time compared to IT or even NBFCs or bank.
Right, FMCG and most of the companies we are speaking to so far in the result season have been talking about a good festive season that would cheer up the volume growth, which has been missing so far, and normal monsoon also augurs well for Indian consumption stocks. Also, IndusInd Bank came out with numbers, and let me discuss this stock in detail because a lot of people want to know about IndusInd Bank. JP Morgan has put an underweight rating on the stock with a target of 550, and the kind of elevated provisioning will still saw for the MFI business is on the negative side. In fact, JP Morgan believes that the Q1 entire profit came from trading income as well as the other interest recovery. So, on the operational front, results were slightly disappointing. In fact, the core pre-provisioning profits as well as asset quality both continue to remain weak, and the headline net interest income was nearly down 14% on a year-on-year basis. Ashish, quickly, your views on IndusInd Bank. I know the stock has been volatile, but do you see that the stock probably would bottom in the near term, or probably are there any signs of bottoming out?
No, certainly, there's no sign of bottoming here till yet on the IndusInd Bank. It's been a very volatile counter, and we have seen stock any bounce back in the stock. There's a continuously selling pressure. I think whatever the corporate action problems are there, it may take some a couple of quarters to bank for the resolve and to reflect in the prices. So one should not try to do bottom fishing here. There are stocks like ICICI or Kotak is well placed compared to IndusInd, so one can focus there. For the timing, IndusInd Bank is an avoid category stock.
Okay, we'll avoid the stock of IndusInd Bank, and it continues to remain quite volatile, as Ashish Bahety was also pointing out. But Ashish, would you like your views on the IT sector? Multi-year lows on various stocks. Nasdaq, however, is at record levels, but Indian IT is at 2-year, 3-year low, whichever stock you choose. TCS, Infosys, Wipro, numbers were okay. Stocks have been under selling pressure. Any thoughts on IT stocks, especially the likes of Infosys, TCS? Would you be a buyer here?
There's a clear discrepancy in IT stocks. The mid-cap ITs is on huge pressure. If you'll see TCS, Infy or Wipro, all are trading at either the 52-week low, or TCS is just almost at the 3-year low price point. But however, if you'll see that mid-cap IT, there's still good strength there. Most of the mid-cap IT is trading above 200 MA, and we've seen a good rebound even today, Birlasoft and other mid-cap IT stocks. So certainly one can go long in mid-cap IT, but strictly an avoid category on the large-cap IT stocks.
Correct. And clearly, Infosys also today recovered from the day's low, however, ended on a very flat note. TCS continues to slide lower, and obviously, we have that big Moneycontrol interview in which the management said that they are looking to trim nearly 12,000 jobs, nearly 2% of workforce in the mid and higher level category. But shifting gears and talking about real estate, one sector which has been in momentum, but off late, probably last two series have been quite challenging for real estate stocks. In fact, this series also we have seen stocks in the F&O segment, Prestige Estates, DLF, Oberoi Realty, or for that matter Lodha Developers. All of these stocks have seen a decent amount of correction. In fact, there were a couple of block deals also in Lodha as well as Oberoi Realty, post which both of these stocks corrected significantly. Ashish, would like your views on real estate stocks, DLF or maybe a Prestige Estates, anything that you like in the pack, or would love to add on the correction mode?
Yeah. I think both DLF and South related stocks like Bangalore related realty stocks are doing good, and one can focus there. DLF is available at touched at 800 mark today. So I think it's a good risk reward point on DLF. One can go along here by just keeping a stop loss of days low 785, and I think DLF can rebound to say 850 zone. However, on the other stocks, I think Brigade and Shobha is doing good. Prestige is one stock where one can go long. So we are more bullish in the Bangalore realty stocks.
Correct. And recently all of these Bangalore related stocks have also entered the Mumbai real estate markets. For example, Prestige Estates, they are now doing a lot of projects in Mumbai metropolitan region, and Brigade also for that matter has been expanding not only in the MMR region but also in the low cost or affordable segment. Ashish, before we let you go, your view on metal stocks. Globally things are moving good in terms of trade deals happening. A lot of US-China relationship improvement is also seen. Recently, we saw some volatility in copper, some volatility in aluminum. Overall, what's your sense on metal stocks? Would you be buyer in steel stocks, or would you prefer stocks like Hindalco, Vedanta, which are on the aluminum copper side, meaning your overall holistic view on the metals pack?
We'll be more, we are more bullish on the non-ferrous metal stocks. Stocks like Hindalco and Vedanta are looking good on the charts also. And I think the way we've seen the uh, uh, metal prices like copper, nickel prices are shooting up, even the zinc. So these stocks are looking good compared to Tata Steel and JSW. Hindalco is our most preferred pick in the entire pack. It's trading about 20 DEMA. It's holding very firmly above 20 DEMA. And we're expecting 710 to 715 zone in Hindalco very soon. The second preferred stock would be Vedanta. However, it has been consolidating near its 200 DEMA. But it's from the risk reward point of view, it's quite favorable here. So one can go long by keeping a small stop loss of 430 for the probable target of 460.
So that's the view coming in on Hindalco and Vedanta. These are the two stocks in the non-ferrous space which are expected to do well. At least the charts look good. Tomorrow, Tata Steel reports their numbers, and ahead of the numbers, the stock was quite volatile. If you look at the Kotak estimates, they are expecting the revenues to rise nearly 3.5%. EBITDA is expected to move 10% higher, and we are expecting that the UK losses, which is the European losses, would narrow significantly or probably break even on the EBITDA side. So we'll watch out for the entire metals pack. Tata Steel will be in focus ahead of the numbers tomorrow. With that, we are completely running out of time. Ashish Bahety, thank you so much for joining and speaking to Moneycontrol. With that, it's a wrap, and we see you on the other side. Do browse moneycontrol.com for all your business news and updates.